All. I trade a variety of different currencies and stocks and commodities, stock indices mainly, and commodities like gold and oil and some exotic currencies as well. And I came across this pattern. I thought I'd make a very quick video. It's very late at night here, but I came across it whilst I was scanning the charts at the end of the day. This is the South African Rand against the US dollar, USD ZAR. And basically, if it goes up, it means that the dollar is strengthening against the South African Rand. If the chart moves down, the Rand is strengthening against the dollar. Now you'll see here on the chart, on this area, this is a day chart, you can see this triangle. And this triangle has occurred, this pattern, after a fairly strong uptrend, moving above and bouncing off these moving averages. That's the 100, 200, and 50 period moving averages on the day chart. So what I've done, I want to show you how to trade this. It's a very simple trade setup. Very easy. Anyone can actually do this. So I've taken this day chart and I've zoomed it in from there. First of all, into a 4-hour chart. Now my charts are a little slow. There's the 4-hour version. You can see the lines. Trend lines are perfect. And the price right now is kind of in between both of these lines. And then I've zoomed in even closer into the 1-hour chart. And we've got the same trend lines there. There's the triangle. So if I sort of zoom it out like that, you can see the same pattern, but with an hourly chart. And that gives me a little closer look into what's going on. You can see all the moving averages on the hourly chart are sort of in the middle, in between the two lines of the triangle, the downward sloping upper line and the upward sloping lower line, and we're right in the middle, and also the moving averages are right in the middle, and we're trapped in between. I think this is the 50 period moving average. Actually, it's probably not. It might be the 200-hour moving average. Let's just have a quick look. Yeah, so that's the 200, and we've got the 50, this one, and then the gray one is the 100. So don't worry about the moving averages. You can see we're moving in a sideways range, so the moving averages tend to be a central point around which the price collates. Now, how to trade this? Well, we want to trade a breakout. So which way would we expect this to move? Well, in a triangle after an upward trend, you'd expect the breakout to be higher. It may break out lower. A triangle is kind of non-directional, but it depends on the preceding trend. And in this case, we've got an uptrend, so we expect the breakout to take place upwards. So the way to trade this, if you just zoom in a little closer, you can see where the lines are on a much closer view. And it's very simple. Either we trade within the triangle once we get down, so bearing in mind that we want to trade this upwards ideally, because it's a triangle following an upward trend, and normally it's a consolidation period followed by a resumption of the trend, which will move up there somewhere. So having that in mind, there are two ways to trade this. One, we wait for the price to reach back down to this upward sloping lower part of the triangle, and we put a buy order in there. And in this case, if this happens in the next hour or two, it would be around about this area here where the cursor is, and that's at about 15.9 round, about 15.9. Call it 15.9, just slightly more than 15.9. So we put a buy order in there with a stop loss quite tightly beneath this line. That's the first trade opportunity, or first trade idea. And then we'd expect a bounce off this trend line, a move up to the top, and depending on how far progressed we are into this triangle when the breakout occurs, it looks like it may go on for another few hours, but who knows? We could get a breakout any time now, or it might end up that we proceed further into the corner of this triangle before we get a breakout. Nevertheless, we would then look for a breakout above the upward line after having bought near the slower line with a stop loss below the lower line. So we'd buy it around about 15.9, and we'd hope for a breakout through the top. That's one way to trade it. The other way is to forget about trading off the lower line, which puts us in obviously at a better price if we're wanting to buy. That's the advantage of, and we can also have a tight stop loss straight beneath the entry price. So I'd go at 15.9. Sorry, I'm thinking of euros and pounds at the moment. 15.9, stop loss probably at 15.8. So it's a very tight stop loss. And for a target breaking up through there, we'd look for a target roughly equal to the height of this move here. So that's often what happens, is that the preceding length of the trend before the triangle forms would be the height of the next move. So that's from about call it 15.2 up to the beginning of the top of the triangle, 15.2 to 16.1. So that's about 0.9. So we go from a breakout of 16.1. We'd go up to about 17. Okay, so that would be our target. So either buying there, breakout through the top, target of 17, or a breakout through the top and then triggering the trade the moment we break out through the top. If we go back to the daily chart, let's have a look at where 17 is in relationship to where we are at the moment. Well, that area there is 16.3, so we're wanting to move quite a lot higher. And 17 is about there. What's interesting about 17, so I can just put a line in there as a sort of a target line. If I just put this horizontal line in at 17-ish, there, that's 17. I'll put it in at precisely 17. This is not a precise science, but it's close enough. So there's 17. And what's interesting about that price level is there is actually also some resistance there. And I'll hazard a guess that if I draw a Fibonacci from the top to the bottom as well, it'll end up being one of the fib levels or pretty close to it. So we can just do this and put the fib in from the top down to the bottom. And Bob's your uncle, there it is. That level there at 17, apart from being a round number, which is important, price gets attracted to round numbers. It's also double the length of this. It will be, when it ends up at 17, if it does, double the length that we've already got in front of us here on the left-hand side. So in other words, the distance from the breakout to that target level at 17 will be equivalent or roughly equal to the size of that first move up until that point. And well, it's a round number, it's a Fibonacci, it's the 61.8% fib of the move down from the top to the bottom, and it's also previous resistance and an area of containment or ranging or pausing in the market, call it that, whatever you want to call it. So there you go, pretty simple trade. So target 17, 61.8% fib, previous resistance, and price action confirming that that is actually resistance. It's also equal to technically the same length as this move up before the triangle formed. And we can get in with a tight stop loss either beneath there if we buy at the bottom, or when we break out and close, we want to close on an hourly basis. So if we go back to the hourly chart, we want to make sure that we close above this downward sloping trend line, which forms the upper boundary of the triangle, and we want to close above there on an hourly basis. If you want to be really smart, really clever, and a bit of a sneaky trader, you'll also make sure that we've broken above this resistance here. So if I put a horizontal line in there, you can see they all actually work together quite beautifully on this particular example. I'd say this is a pretty decent trade, like a really good setup. So you can see we've got previous resistance at that level as well. It's not only a horizontal line, it's the top of the triangle, and we'd want an hourly close above both of these lines, and then the stop loss beneath, backward, inside, probably equivalent to about 30 or 40 pips or something like that, which would be about 0.1 on this chart. So if we break out there, let's say we close back there, I'm going to tell you the sneaky trick, I forgot about that, but I'll come back to that right now. But if we broke out from there at around about 16, target of 17, and our stop loss would be about 15.9 or thereabouts. So 0.1 Rand stop loss and a 1 Rand target. That gives us a risk reward ratio of 10 to 1, which is excellent. And it's a pretty safe, secure, technical trade. And overall, I'm always looking to sell this currency, the Rand, against the dollar. So fundamentally, I think it's a pretty good bet as well. Sneaky trick, which I was going to tell you about and I forgot earlier, is that when we do get a breakout and an hourly close above that trend line and this red line, horizontal line, previous resistance, we do get an hourly close above both of those lines. Wait for the price. If it closes up significantly higher, wait for the price before you get into the trade. Wait for the price to retrace back to one of these two supports here and then buy. Don't buy at the top of the candle that closes above the lines. Wait for that candle to have a small retracement back to these supports here, which were resistance and now become supports. And that would be entry price. Gives you a tighter stop loss and more room on the upside to get a bigger profit. Well, I hope you found that helpful. It'd be very good for you to watch how this plays out. If you've got a demo account or if you've got a live account, trade it with a very small amount of money just to practice. I'll probably be taking this trade. I know I put something up on Twitter saying I wasn't going to be trading this, but I'm definitely going to keep an eye on this. And if we do get that setup working out, then I'll be into that. Now, the other thing is possibly I might take a trade off the bottom here as well to buy for a move up with a stop loss beneath here. If that one fails, I won't be taking the short. One thing you could also do is if you buy at the bottom here, that's the first opportunity that I mentioned earlier. One way you could trade this, trade off the bottom for a breakout through the top, or just trade the breakout. But if you do take a trade off the bottom and it fails and it breaks down and you get stopped out, you could either just take that loss and leave it and wait for another opportunity later on. The other opportunity being a breakout once again above this downward sloping trend line, same setup as we've just talked about. Or the other thing you could do, which I don't advise, is you could stop and reverse. So if you take the bounce off this lower trend line and the price breaks through and stops you out, you could at that time of stop out reverse your direction and trade it short. That could work out. It's not my favorite direction though. Overall, this is a bullish pattern for the dollar yen, the dollar ZAR. It's a bullish pattern. So I'd be wanting to take the longs on this. And also fundamentally, I think it's the right direction to trade this currency in. So good luck. Breakout through the top, target 17. They give you about almost a full Rand's worth of movements upward, which is about, what's that, about 7.5%, which is and risking less than 1%. So that's an excellent risk reward ratio. And it would be even better if you could trade it off this rising trend line before it breaks out and take the trade from within the triangle. Watch it. Have a bit of fun with it and see how it plays out. It's the US dollar against the ZAR, South African Rand. Put it up on your charts, watch it, take the trade with a small amount of money, or if you think it's a good trade and you're an experienced trader, you can go with a proper position like I probably will do myself. I think it's going to take a number of hours before this happens, so I'm going to bed now. When I wake up in the morning, I'll be keeping a very close eye on this opportunity for an excellent technical trade, excellent fundamental trade, and a brilliant risk-reward ratio with low risk and good reward. Well, good night, and I'll speak to you again soon.